Hey everybody, Boris speaking Forex. Welcome to Weekly Technicals for the crosses for April 29, May 3rd, 2019. And the crosses theme this week is really, I think, calm dollar relative strength. Essentially a reversion to the mean trade across a couple of trades, as well as euro weakness, which I think is probably my strongest view as we enter the week. So here are my ideas for you guys as we enter the week into next week. I like CAD Swiss. I like that to the upside. We'll take a look at the chart and I'll show you why I think it could be an interesting trade. The resistance here is 77, support is 75. I also like Kiwi Yen to the upside with resistance at 75 and support at 73, and Euro Pound to the downside with support around 85 and resistance 87. So let's just take a look at each one of these in separate view. Let's just start with Euro Pound. So Euro Pound, of course, and let me just move this over so you can see all my key points here. First of all, Euro Pound, there is nothing on the calendar, there's nothing in front of us that makes us confident that Eurozone is going to have any kind of green shoots. It's difficult to imagine a positive Euro scenario into the next several weeks, as essentially the whole region remains relatively moribund. Growth remains pretty problematic, and we still don't quite know just how much of a stressor Italy will be on the broad region as we go forward. All of that just opens us up to that drive towards the 110, which is, as I said, like sharks in seeing blood and water. The shorts are really going to be very attracted to. So when we look at the crosses here, it's about to lose a 20 SMA. It's come off the highs here. There's a very, very hard resistance ceiling at the 87. And a break through the 20 SMA really opens up the run towards the 85s, especially, this is the key thing, if we can get any support out of the pound side of the trade, and the support could come in the form and shape of better UK data, but most importantly, just perhaps a little bit less dovish commentary out of the BOE. If the BOE essentially telegraphs to the market that it feels that perhaps some of the most egregious problems of Brexit are no longer a serious threat, that could provide a little bit of a support for pound. And if it does, we could see pound rally to 130. That provides us the move towards the 85s on the euro pound as the trade. So that's a very interesting trade here into event risk as the week develops. Now looking at CAD Swiss, which is another one of my favorite trades. So we all know that dollar CAD is a notoriously non-trending currency. It's sort of a big fake out move one way or the other. But on the other hand, if you look at CAD Swiss, it tends to really hold trend for a significant amount of time. This is basically about a month, a couple of months worth of trend, couple of months worth of trend, a month and a half worth of trend. And here we are still in trend, still holding above a 20 period SMA, mild support right over here, essentially at the for the last 3 days. We haven't made fresh lows. I really like this trade to the upside just on a technical basis, but the fundamental basis here is the positive CAD GDP that could be staring us in the face. And if we do get the dollar rally is going to express itself, I think, strongly, especially if we can get any pickup in yield into a dollar Swiss move. Dollar Swiss already made fresh yearly highs. If we can make a second attempt at the 102 level in dollar Swiss, that should really lift us through the CAD Swiss trade to the upside. So I really like this. I think another possible run towards the 76.30 at very minimum is probable, and the trend is setting up in our favor. Then the last trade, take a look at here, Kiwi Yen. So Kiwi Yen finds double bottom support right over here at the 73.50. We can see that right over here. 2 days of no new lows. We're holding bid. Again, this is sort of a trade. If you believe that the yen crosses bounds, or that the dollar yen bounces back up to the upside, I think of all the calm dollars, the Kiwi is the least vulnerable to the downside. So this combination of upside in dollar yen, low downside in Kiwi provides us with a decent trade to the upside. We still have lots of ample room to try to close the gap towards the 20 SMA. The other thing here is that if you're betting against a weak employment data, now this is obviously, I think in some ways, the most risky of all trades, because if you get a sort of a very, very weak employment data, certainly the Kiwis could collapse and drag the whole trade to the downside, make fresh lows. But if the employment data is essentially better than expected, or sort of not as horrid as the market anticipates, that could provide us just an instant catalyst to the upside, along with the drag to the upside from the dollar yen cross. So while this is not my favorite trade, I think it's a decent trade. I really like the CAD Swiss to the upside. I think the euro pound to the downside, and this is probably the third of my favorite trades, but it's a good one nevertheless. Those are the cross ideas for the week. I wish you guys the best of luck, the best trading. Boris Schlossberg, over and out.